Welcome to the Strategic Treasurer podcast, your source for interesting Treasury news in your car, at the gym, or wherever you decide to tune in.
Why does modern Treasury technology matter? On this episode of the podcast, Strategic Treasurer's managing partner Craig Jeffery and GTreasury's Chief Product and Technology Officer Alok Tyagi discuss some of the largest challenges facing today's digital Treasury professional. Listen in as they evaluate how technology is being leveraged to address these obstacles and learn of some ongoing innovations that will impact both the future use of these systems as well as future workflow realities for Treasury operations.
Hey, welcome to this edition of the Treasury Update podcast. I'm Craig Jeffery. I'm here with Alok Tyagi from GTreasury. Our topic today is why modern Treasury technology matters. Welcome to the podcast.
Thank you for having me.
So let me begin with the first question about the challenges of technology. When we think about what goes on in Treasury, but in really any area of the business, technology is changing and creates a set of challenges. So what do you see are the biggest challenges?
That is a great question to start with. And if you just think about it, the broader industries are changing. And in some regard, the pace of technology change just keeps getting faster. And businesses that are not able to keep up with the changes starting to build this digital chasm. And where they are in the digital chasm, either they are becoming laggard or they are finding more productivity and higher return. If we just think about a couple of data points, S&P 500, an average age of the company has shrunk over the last several decades. And people predict that in the next decade, half of the S&P 500 companies who are not able to keep up with the technology change will not be there. And they are increasingly getting replaced by the unicorns. In fact, now there are hundreds of unicorn and more replaced by the technology companies. So what it means for the finance companies and what it means for the treasury side of the house is people are looking for technologies that really bring a lot more of operational efficiencies, really looking for a lot more of automation. They're also looking for technologies that really drive actionable insight. So how can they make more real-time decisions? They're looking for technologies that really enable them to do a better job in terms of regulatory compliance that are highly secured. So those are some of the areas, because in some regard, businesses are now built for change. So technologies that make them agile, that make them enable with the changes that are happening is what companies are looking for.
So Alok, is that when you talk about the digital chasm, and then you're talking about being the agility, the ability to respond more quickly, things are changing, some are not keeping up. Can you just describe the chasm that you're talking about?
So one of the best part of our job is that we speak with a lot of customers. And in the treasury space or in the financial space, you will see that the companies that are not keeping up with technologies, they operate in silos. So you will see that some part of their organization is working on bank portals, some people working on spreadsheets, some people are working through ERPs, and those silos makes it very hard for them to really reconcile everything in one place. The other areas that you will start to see is the ecosystems are changing, the banking systems are changing, how they do the trading is changing. So those are the areas where technology change is really being very paramount. It's very hard for them to close the books on time or able to do reporting. Otherwise, they wait for this month end or the weekend when they can do the reporting. So they just don't have the information real time to be able to really predict or really have that actionable insight that they're looking for.
I think that's an interesting way to put it. That concept of financial statement time. In the accounting world, several decades ago, a big push to close faster and faster. Instead of closing 15 days, 10, 8, 7, 3. Well, in Treasury, for example, waiting a month for data is completely unacceptable. And that's why you're talking about real time. The need for that decision information, or the information to help you make those decisions, is much faster.
Correct. And this is where, if you look at the technology spectrum, I generally put them into three horizons. Horizon 1 are the technologies that have already achieved the inflection point, that have now become the mainstream. Horizon 2 are the set of technologies that are starting to really make wave in the production environments. And Horizon 3 is that kind of technologies that one has to watch for. And in the next couple of years, they'll be getting to that tipping point. So if we look at the Horizon 1, there are a couple of technologies that are significantly now in the mainstream. Companies that deliver solutions through cloud, SaaS kind of a software, are really becoming the mainstream. And not because of technology, but also the business benefit that they bring. If a company is invested in SaaS, you are getting a better ROI. You are always getting continuous innovation. Companies are delivering them on a regular basis. SaaS is also highly secured, highly reliable. They now have a broad reach. You can be having data in the country that you are living, so that you can be supportive of the compliance and regulation perspective. Other set of technologies that are already in the Horizon 1 making incredible differences, things like APIs. So companies that are really becoming more and more modern and successful have an open platform because they know that they are good at certain things, but the digital ecosystem that they bring to the companies is what really makes a big difference. And the third area that I'll just call out is in the areas of, call it business insights, the reporting aspects, how companies really merge disparate systems into a single database when they combine their portfolio so that you can really have an actionable insight, for example, from cash to risk. So it's just not about that you are only having a minor part of the data, but the holistic data that really provide in a more easy to use, more intuitive way. So these are just some of the examples of the Horizon 1 technologies that are now becoming mainstream.
So let me just question on a couple of those things just to probe a little bit. So SaaS technology in Treasury and finance. In Treasury, banking was delivered on the web really about 2000, somewhere around 2000 and on. They were converting all the installed solutions. In the Treasury management system space, 2006 was the inflection point for most new sales were coming there. And then recently we've seen of all the systems that are out there for treasury management, it's over half. It's past half is SaaS. So that seems to be well established. Now API seems a little younger to me. So I don't know if you put that in 2 or you put that in 1 because it's there's a lot more talk about it. The regulations that support that, like PSD2, are a little newer. So is that really your sector 1 or your second sector?
I still put APIs in the Horizon 1, and it's because one is adopting the cloud. The second is what kind of a modern platforms are built up using SaaS technologies to deliver innovation in a continuous way and to integrate with a broader system. Because if you think about it, take a step back in the financial space, the ecosystem is large. You have to interface with bank. We speak with customers. They do banking with tens, if not hundreds of banks. We interface with customers who not only have single ERP, but multiple ERPs on the back office. They interface with multiple trading platforms, multiple investment platforms. If you don't have a strong open platform, it becomes a barrier. It becomes an impediment to be really able to deliver innovation in a much more quicker way. The values of SaaS and cloud is just that how do you deliver more innovation faster, better, more innovation in a much more secure and reliable way, much more innovation in a global reach and the economies and the pace so that you are just keeping up with the changes happening in the industry. So these kind of go hand in hand. And that's where you will start to see a lot more as the mainstream, where most of the SaaS platforms that are becoming successful are really more open platforms.
Just another follow-up on the third sector where you talked about either coming to a single database or moving to a better reporting environment, whether it's reducing the number of disparate data sources into a smaller set of databases. It seems that the use of things like business intelligence tools that can go after different sets of data is a key component of that, because even if as you rationalize down the number of systems you have for Treasury or finance to different areas and you go after that, it seems like Treasury has to touch so many new areas, whether it's in Excel spreadsheets, different tables, different databases, because their questions vary. What they ask today and what's put forth in the future means they have to go after other sets of data that they didn't anticipate before, and so they have to do it. So that whole idea of that faster reporting has multiple challenges for more challenges, I think, for Treasury than financial reporting. Financial reporting there's a life cycle of what needs to be included in the financial statements, and they go, and it just seems Treasury is always charged with, we have a new risk. Now we need to look at other data. We need to incorporate it into our process. Therefore, we need this faster reporting that you're talking about in cycle 3. And it seems like that's an ongoing frontier challenge.
Absolutely. I mean, this is where, because again, in the Treasury, it's not only a fixed format. You have to do a lot of operational reporting on daily basis, a lot of ad hoc reporting, a lot of dynamic reporting, and also reporting in a way, because you are now doing reporting for multiple levels. If you are doing a reporting for C-suite, has to be easy to use, intuitive, and you are really crunching a lot of different data from a lot of different static data, dynamic data to be able to pull that together. So the whole aspect of how open your platform is to be able to really ingest a lot of different data points from different data sources, and how integrated your system is so that you can cover variety of data. Both data at rest and data at motion becomes extremely important. So this is where the whole aspect of Horizon 1 is. And if I, let's say, take the discussion to the Horizon 2 set of technologies that are now starting to make waves, one is about machine learning and artificial intelligence. That set of technologies, we are starting to see its use cases already happening. We speak with customers who are now starting to use with the data volume that's growing. How do you really go from a rear view operations to a more front and more preventive, more predictive operation? So it's less about being very reactive, but rather being really knowing what your green highways looks like, so that you know whatever those outliers are, whether it is the payment fraud scenarios or additional scenarios that we are really seeing bubbling up, is becoming more and more mainstream. The other area is, you'll be hearing also about it, is robotics process automation. We are enabling our products now where any routine task is now getting more and more automated. You will hear a lot about from the financial companies that we have enough headcount, but our headcount is nowadays really busy doing the routine task. They come and do the same thing day in and day out. How can that be automated? So you will be seeing the efficiencies that will be now unleashed with the robotics process automation. These are some of the examples of Horizon 2, where the modern products are starting to come with those capabilities.
Yeah, that's interesting. So robotic process automation, machine learning, artificial intelligence. So maybe some examples of that could be, like you said, one is detecting something that's anomalous in payment security. This is out of the ordinary, so you can find it. And then others might be, how can we determine a forecast?
Exactly. I mean, those are some of the forecasting is another scenarios where a lot more about not only just the traditional sense in terms of looking at the cash forecasting, but also connecting cash with the risk aspect and the exposure aspect, and how from a disparate sources it can be far more preventive, so that if you are in the C-suite of these corporations, you are actually running your business in a more confident way, that because you have these technologies that are providing you the foresight that otherwise you would be reacting after the fact. And now you can actually prevent before any of those bad scenarios to happen.
It's interesting that you put in the Horizon 2, you put machine learning, robotic process automation, and artificial intelligence there, not in the more end state of Horizon 3, which is reporting a basis for analysis. Very interesting.
Yeah, because these things are already starting to happen, and there are products coming out. We are embedding in our products. These things are already getting adopted. And we are already starting to see the benefits that customers are finding out, particularly because just the volume that's now getting generated. We have customers that do hundreds of thousands, if not millions of payments a day. And with the amount of volume that's happening, and the electronic commerce that's growing, it's very difficult for a company to really operate, particularly when you are in a highly compliant and regulated industry, that how do you ensure that your operations is really operating the way it should. So that's where some of these technologies, with the advent of more automation, is just becoming increasingly adopted. What I put in the Horizon 3s are the kind of technologies that are out there. There's a lot of work happening, still not in the production environment at a scale level. I'll put like blockchain as a good Horizon 3 technology. Quantum computing is another example happening in Horizon 3. So if we look at blockchains of the world, there's a lot of investment happening from banking, and it requires the whole, not only just the technology aspect, but growing the technology ecosystem, the vendors across the trading aspect or across the supply chain. So as blockchains of these ecosystems come in place, they will bring the sea change in the entire industry and what that could look like, from open banking to the open commerce to the open trading, and what would that look like just from in terms of how we connect to the banks. So there's a lot of research in that space, and it's a couple of years out, but when that happens, expect that tipping point will be very seismic.
Alok, so thanks for that. The goal of technology is something that I'd like you to talk about, and I know you've used the term digital backbone. So what is the goal of technology?
So if you think about it, if you are the CFO or you are the group treasurer, there is a reason you are looking for technology. You're just not buying into technology for the sake of technology. So very important that when we provide the digital backbone, we want to be able to make sure that the data flows back and forth across different roles, different personas, and it just enables them to become more and more productive. And it also connects with the digital ecosystem that a company may have. And that's what we bring to the table. So from a CFO perspective or a group treasurer perspective, they are really looking for how they are making the right decisions, how productive their people are across the different personas, how they can go from cash to exposure rather than go through a very disparate systems. That's what a good digital backbone really enables, because now their reporting is far more comprehensive, far more actionable insight that they have on their fingertips. And those are the values that we have now customers not only looking for the operational efficiency, which they always look for, but also really hard ROI. We have customers who talk about that how, because of the system that they have put in place, a modern system helps them save hundreds of thousands, if not millions of dollars in bank fees. How it really saves them a couple of basis points because they are carrying and managing a lot of debt. The multi-currencies aspect, if you are a global company and you're dealing with that, we now live in a global macroeconomic environment which is far more volatile. So how they are really helping the system is helping them manage their FX exposure. So it's the overall aspect of it, that digital backbone, that really covers whether their front office need, whether their back office need, or their middle office need. And how is it really covering the end-to-end in a workflow-enabled way? Because people don't work in isolation. So the guys who are working on the front office dealing with the cash, and how that results into a back office accounting aspect, whether it's the hedge accounting or cash accounting, how those really the workflows enable is very, very important.
Yeah, so this backbone is a consistent connectivity between these different areas, where there was a normal flow of what's my exposure, or here's information on my cash balances, then what do I do? Very almost discrete steps with handoff points. You're saying this backbone helps streamline
Exactly. So, I mean, case in point, when you are merging two systems like we did some acquisition, we are not integrating them. We are building a single solution. While these are modular systems, but these are workflow enabled. They cut across different personas. So the digital backbone enables them on a single database so that when customers are looking for it for their different roles, there is a workflow that gets enabled between the treasury analyst to the back office accounting guy, to the guys who are looking at the risk, and making sure that they all are getting the single version of the truth, and they don't have to really find it very hard across different systems that they have to gobble it together.
If you're putting two systems together, you said it's not integrating them, it's workflow enabled, they're in a single database. How does that actually work? Because you have two systems with different workflows built in that attack and interrogate the different database and move the process along with the different rules. How is that not integration if you're putting together and they're workflow enabled? Aren't you having to, is one taking ownership? Or are they both workflow enabled tools and the tool sets allow you to use both of them? You just expand them? How does that work?
So multiple set of new things have happened over the last decade or so. We all have been in this industry long enough that where we have seen companies acquire product, they try to integrate them only to find out that it's actually not very well integrated and they still have dissonance. So for example, in the cloud world, what you will find out is the first thing is always about the design thinking. You will be hearing a lot about how design thinking work. This is where people now observe how different roles, personas work. And when they design the workflows, it really look for those kind of an emotional experiences and connect. So this is where the overall aspect of the UX harmonization is very different, significantly different than how things used to be in the past. The other area where things are significantly different in the past was while you may have integrated two different products or multiple products, but each product, each team will work in different cadence. You are providing updates on a different cycles. For a customer, if you are an on-premises customer, you are getting a lot of these different updates that are getting applied in different part of the product. And sometimes the product will work, sometimes it doesn't work, it breaks. And this is where in the agile cadences, we deliver continuously. You are only operating in a single cadence. At a single time, all the systems are coming up together. And always the single database. So it's not about like you have multiple products that still have multiple different databases in the back end, and you are trying to kind of stitch it together. With a single database now, what it enables is that you don't really have to do the database management aspect, the reporting aspect that you are getting multiple different reporting from multiple different databases. And from a user perspective, it's just because of the UX design and the design thinking aspect, it just enables your user flow, whether you go from cash to the risk or you just see that there's a level of easy of use and intuitiveness is now built in because of the new way that the companies approach.
So to wrap up this section, how would a prospective buyer look at technology, or how should they look at technology considering, the year, where they are, where technology is, and how does this make an impact, in the future roadmap? What do they really need to be thinking about here?
So there are multiple aspects of it. Maybe this is where we wrap it up where we started with, that the pace of technology change is so fast now, and businesses are finding it difficult to keep up with it. So the first thing, if I'm the buyer, always look to partner with companies who are invested in the modern technology stack and modern way of working. You want to partner with companies that can keep up with the change. And if you are not partnering with companies that are invested in modern, it's very hard to keep up with change. Look for companies that are also working with lean, agile, design thinking, DevOps. Some of these best practices enable those software houses to be able to react very quickly with the technology changes that are happening in the industry. Because we know that the technology that you and I are talking today, things will be different if you and I are doing the same podcast a year down the road. We'll be talking about something else. So if you are not invested in those kind of companies, by the time goes off, you'll find out that you are now already falling behind. So I think that becomes one aspect of the factors. The other is pay attention to the differentiators. You really are looking for companies where customers really speak to, whether ability to implement, how good they are in terms of servicing customers, and really whether the product is bringing those operational efficiencies, those ROIs, actionable insights that is really important, so that you as a company, because these days companies are building businesses for change, and you want to make sure that there's an infrastructure that can provide you those real-time information so that you can really operate your business in a more forward-looking way.
Excellent. Alok, thank you for your time and insight on this great topic.
Thank you for having me.
You've reached the end of another episode of the Treasury Update podcast. Be sure to follow Strategic Treasurer on LinkedIn Just search for Strategic Treasurer. This podcast is provided for informational purposes only, and statements made by Strategic Treasurer LLC on this podcast are not intended as legal, business, consulting, or tax advice. For more information, visit and bookmark strategictreasurer.com.